Clara Baez is a single mother of four who until recently was looking forward to her upcoming retirement. Part of her plan was to buy an apartment where her eldest daughter lives, Fort Myers, Florida.
I decided to buy in Fort Myers because my eldest daughter moved there and bought an apartment in the same complex, right above mine. I bought it on the first floor and she bought it on the second.
But Clara's retirement dream has been shattered. After many failed negotiation attempts, now Clara has 6 months without sending a payment and is about to lose her apartment.
Lo último que he recibido del banco de documentación.
The last notice I've received from the bank was a letter informing me that they are submitting my case to a lawyer, that I am on delinquency and my credit is going to be ruined. At this point of my life, let my credit be ruined. What am I gonna do?
La vida ya, pues que se dañe mi crédito porque yo qué voy a hacer.
Yet, what worries Clara the most is not losing her apartment, and with it all her life savings, but that her daughter and her family could be next.
Personalmente, como madre, lo que más me da temor.
Personally, as a mom, what worries me is that my daughter is living there. Her husband already lost his job once, and they were in a very hard situation. That's what I fear the most. If I lose the apartment, that's it. I lost my whole life savings, and I have to understand that I'll never be able to buy a home in this country. But my daughter is just starting up, and it would be very sad if she found herself in a situation like mine.
Que se vieran en una situación similar a la mía.
Due to the more than 5 foreclosures in the complex, their apartment's value has decreased tremendously.
Bueno, ella está...
She currently owes about $130,000 at this point, but the other properties are currently being marketed at about $60,000. That's how it is.
And although they have been working hard to keep their payments current, they missed a payment once and are now facing the consequences.
Por la situación en que se vieron.
Due to the hardship situation they recently faced, they missed one payment and their credit got ruined. She had been staying home with the baby, but just had to begin working again and needed a car to get to work. But because they ruined her credit, she couldn't buy it.
Although she's currently on time with all her payments, she was more than 30 days late in the past 12 months, and her husband did lose his job last year, but is now working again. So can they qualify for Obama's plan, or will they be left out on a loophole?
So Sharon Price, walk us through the new rules. What's in this new homeowner affordability and stability plan?
So there are two main components to the plan. And one component is for families such as the one you just showed who are what they call underwater, who owe more than the home is now worth. But it's only for people who are somewhat underwater. So if a family's plan owes 80 to 105%, anyone correct me if I'm wrong, of their what the home is now worth, then they are eligible for the first part of the plan, which is a refinancing plan. And only loans that are held by Fannie Mae or Freddie Mac, and there's 1-800 numbers that people can call to find out if their loan is in fact held by them. So only loans that are held by them will be eligible. So it covers a fair amount of families, but not everyone. And the second part of the plan is for families that are either already delinquent or who may become delinquent. And the idea here, this is the plan that costs $75 billion. And this is the plan that is intended to encourage, incentivize servicers, lenders to actually help these families to modify their loans. And so there are payments.
And when you say modify, that means revalue the house and come up with a whole new price for this?
Plan, and there are a variety of ways that they can do it. There's not just one formula for the way that they can help the families to modify the loans. So there's $1,000 if they are able to help the family to restructure the loan, and that it becomes a sustainable plan. They can lower the interest rate. The idea is to get the payment down to 31% of the family's income. And so that right now people are paying 50, 60% of their income towards their mortgage. The idea is to get it down, and there are incentives from the government to help get the payment down to that level.
So just to be clear, to get it to 31%, they have to, in effect, declare that the house is now worth a new amount of money from what it once was purchased
No.
for, or they can't give you a raise. They can't give you a raise to get you up to 31%. So how do they arrive at a new figure? I'm trying to understand the mechanics
magic. Here. And that's part of the problem. I mean, from an economist's point of view, the question is, why do people default, or why do they stop paying? And a main reason is because they're paying on an investment option that's worth less than what they're going to pay. And so the dirty little secret of housing is that we've suffered a huge wealth loss and we're not willing to admit it. And the only question now is whether how that wealth loss gets distributed and how much taxpayers pick up. Basically.
So whether the consumer ends up carrying all of the burden, or whether their partners, the lenders, carry some of that burden as well.
Correct.
But more to your to answer the question that you posed, couple of the things that lenders could do is reduce the interest rate to a floor of 2%, and extend the repayment period to up to 40 years for amortization. This modification lasts 5 years, at which point the interest will begin to adjust no more than 1 percentage point per year to cap at the rate at which conventional rates were at the time of modification. So if today rates are at 5.25 for a 30-year fix, at the 5-year period, that's where it will cap.